It appears that Tesla has the potential to be valued $40 trillion since its stock has surged to unprecedented heights. What $40 trillion of opportunities does Tesla have? It is taken from the research paper Mother of All CapEx Cycles by Morgan Stanley. What is the main takeaway from this study report? And will investors be able to see in the coming year how important Tesla and the auto industry are to the move away from fossil fuels? To find out, keep watching. A significant part of re-architecting the renewable energy transport sector may involve electric automobiles. Many people think that the world will soon run entirely on batteries, assuming that the whole auto industry switches to electric vehicles. According to Blue Myth, the best way to capitalize on the lucrative momentum of the multi-trillion-dollar energy revolution is to make the next battery invention and the materials that go into it. A record $501. 3 cents billion invested in the global energy transition in 2020, and significant sums of money are flowing into the development of new energy. With over $14 trillion in assets, institutions, foundations, and endowments are well positioned to facilitate an energy transition in a manner worthy of a revolution. Forbes describes it as a change in paradigm. This is a big amount of money, and one of the reasons investors are worried about legacy manufacturers is that they have a big internal combustion engine vehicle sector. This enormous commitment, legacy automakers are trying to address two issues: internal combustion engines and electric automobiles. They have only one client, and they will fail if it isn't an electric vehicle. Clean energy is also becoming much more affordable. Maybe as early as 2026 or earlier, electric cars will be just as affordable as regular cars. The cost of energy storage is likewise decreasing quickly, and storage is the key to it all. Without advanced batteries, which need the usage of battery metals, none of this would be conceivable. When it comes to electric vehicles and renewable energy in general, Tesla presently leads this business. By taking advantage of this change, the brand's value will increase even more, maybe doubling or tripling. Morgan Stanley says Tesla is both undervalued and overvalued. They think Tesla may be significantly undervalued as an onshore infrastructure provider for renewable energy, despite being pricey as a pure vehicle company. They consider Tesla to be the best battery capital expenditure option available. Morgan Stanley argues that as globalization moves on into a new era characterized by growing national security concerns, there are larger causes driving the multi-decade trillion-dollar battery capex cycle. Investors need to take into account the new infrastructure and energy supply. Tesla is well positioned to lead in this area. In the future, battery storage will be essential. Elon Musk has stated that Tesla will probably begin their own mining operations, either by acquiring mining enterprises or building their own from scratch, meaning that Tesla will be able to create more batteries than everyone else. Morgan Stanley's consideration of Tesla's options outside the auto business is positive. Conversely, their earnings per share projections and price objectives are confusing and significantly lower than what many investors believe. To put it mildly, many doubters were taken aback when Tesla's market valuation crossed the $1 trillion threshold last year. Prior to this, only Alphabet, Apple, Microsoft, and Amazon have reached this milestone, thanks to a $4 billion agreement to sell 100,000 cars to the rental car company Hertz. It's crucial to recognize how Elon Musk's business stands out from the competition, though. It is rated as a trash bond to start. Tesla's long-term debt was recently raised to BB+, one rung below investment grade as a consequence. Compared to competitors, it has substantially lower sales and earnings. This year, Tesla is predicted to generate $6 billion in revenue, which is about a fifth of what Amazon and Apple will make together. The argument about Tesla's value is still open. More money is invested in Tesla than in nearly all other major automakers put together. Opinions among analysts about its current state are divided. Tesla's $1 trillion milestone is just the beginning, tweeted Daniel Ives from Wedbush Securities. In a client note, Craig Irwin of Roth Capital Partners voiced the bear view that Tesla's stock was extremely costly, trading at 173 times projected earnings for the following year. Analysts expect the market will consolidate with bad brands certain to be wiped out due to many governments removing EV subsidies and the current macroeconomic state. So how is Tesla doing right now? The year has been somewhat unpredictable for Tesla investors. Around $1,200 per share was the starting price of the stock for the year. The carmaker stock price then fell to levels far below $800. The producer of electric vehicles is presently trading its shares for just under $1,000. A large portion of this volatility can be attributed to the company's extreme uncertainty regarding its future, especially in the near future. The COVID-19 limits enforced by the government have caused a manufacturing halt in Shanghai, which is negatively impacting the company's production rates, and the exact amount is unknown. Thankfully, Reuters reports that the company intends to soon start operations at its factory in China. If third-party suppliers are required to be involved, it would be unusual to witness a slow ramp up to previous production levels. Investors will be hoping for some clarification when Tesla releases its first quarter results on the 20th. How soon after the shutdown does the automaker anticipate that manufacturing will resume at its Shanghai plant? Can Tesla accomplish its goals for the entire year's car deliveries? Consequently, the most important thing for investors to watch when Tesla releases its earnings this week will be any forecast the company provides regarding annual car deliveries. A 3-week production slowdown at Tesla's Shanghai facility raises the likelihood that the company will have to reduce its projected number of vehicles delivered throughout the year, but it is still possible that the original estimate will be met. The core of this problem is the company's new factories in Texas and Germany. During the automaker's fourth quarter update, management said that without these additional plants, it could probably increase by more than 50. However, both plants are now operational and could become major volume generators for Tesla. That was back in the year. Tesla is starting a new phase of growth as a result of the 2 new factories. Elon Musk decided to organize Cyber Rodeo at Giga Texas, which will eventually house the company's headquarters. To get things off, Cyber Rodeo produced free advertising, as Tesla usually does. An estimated 15,000 invitations were sent out, and more viewers attempted to attend without one. Big audiences attended the event. In his presentation, Musk also provided an update to his business plan. According to his predictions, 2022 will be the year of scaling, and 2023 will see the release of numerous new goods such as the Semi, Roadster, and Cybertruck. Tesla went on to say that because this new plant is the largest factory in the world in terms of volume, it is an engineering marvel. Therefore, it is even more amazing that Tesla was able to combine all of its components and processes under one roof as opposed to having separate facilities like other manufacturers. We believe that Tesla's cost leadership in battery powertrain technology is a critical competitive advantage that has allowed the business to produce price performance competitive electric vehicle models compared to internal combustion engines considerably ahead of its competitors. What is the future holding for Tesla stock? The rate at which traditional fossil fuel-powered vehicles are replaced with electric ones will likely determine the future value of Tesla's shares, as well as the financial results of the business. As we previously stated, this $40 trillion potential is ready to be taken advantage of, especially with Tesla leading the way. Given its leadership position in EVs, we think Tesla will be well positioned to benefit from the long-term shift to EVs. As the Model I's ramp up, and the opening of new plants in Austin, Texas, and Berlin, Germany, should help Tesla's finances and eventually a rise in the percentage of electric cars. Which Tesla forecasts do you have for the upcoming second fiscal quarter? Please leave a comment below.